Thank you guys for coming. We got a great investor panel. We do these at every DePIN Day. I think it's important to hear from the investor kind of universe, given this sector is growing so much. So first, I'm going to ask each panelist to give a bullet point on their firm, on them, and on DePIN projects that they or their firm have invested in. So let's just kick it off. Down the row we go.
Hey, thank you. So my name is Rakesh Gidwani, and I'm an investor and an entrepreneur. As an investor, I'm a venture partner at Protagonist, where I've been investing for over 2.5 years and primarily focus on Web3, AI, and anything at the intersection of Web3 and AI. And as an entrepreneur, I am the co-founder and CTO of Ion, which is a decentralized AI compute cloud, purpose-built for bare metal. The one DePIN project that my fund Protagonist has invested in is Ion. So that's the project that I'm working on, but then we've invested in several others, specifically in the decentralized compute space.
Great. David.
Cool. So hello, I'm David. I work for Rockaway X. I've been with the company for 5 years now already. And we have basically three funds that we invest and provide liquidity from. So 2 VC funds, one is fully invested. Second, we're investing from now, 125 million. It's mostly focused on DePIN projects, Solana-based projects, DeFi, and AI as well. And the second fund is liquidity provisioning fund that basically provides capital to DeFi and infra projects as well. We invested in a couple of DePIN projects. Back in the days, we invested in Poct Network, Decentralized RPC, Tick, the innovation game, and most recently, we invested in Teneo.
Check. Okay, that works.
Mm-hmm.
Hey guys, I'm Vinny. I run research and I invest at EV3. We're one of the initial DePIN funds, so a good amount of DePIN projects that we've been lucky enough to partner with at an early stage. I'd say right now we focus on the intersection of blockchains and what we call real-world utility. So we're also excited about areas like zk-TLS, what that can enable as well. And we focus on the pre-seed and seed stage, leading those rounds for teams. So if you have any ideas, please come by and say hi. Some DePIN projects that we've invested in include Dawn, Daylight, which is an energy network, Glow, who I believe David's walking around here somewhere, you guys. So, yeah.
Yeah, EV3, if they listed every DePIN investment, the panel would be over by the time it was done. So can't do that. So let's look at what you guys look for in a DePIN project, and is that different from other sectors in which you invest?
Yeah, so I think it's slightly different because in like a lot of other projects, you're looking for blockchain utility or some narrative. But in case of DePIN projects, you are looking for like what's the real world application, what's the sector that they're trying to disrupt. For example, the project that Vinny was talking about, Dawn. So I looked at that project as well, and they're trying to disrupt the telecommunication space or the internet provider space. So for these kind of projects, you have to understand the TAM that they have in the real world, and then how does the value accrue to the project itself, to the device operators, and how does the value or the TAM grow over a period of time.
All right, you hit on a piece I want to return to in a second, but let's continue down with kind of what you look for in a DePIN project. Is that different than others?
Yeah, I think it boils down basically to several key things, which are maybe not necessarily that different to like traditional Web3 investments. And that's usually like the team with it needs to be great and exceptional, as well as the market needs to be great and big enough to support a big revenue generating company. But actually, there are like some differences that needs to be accounted for, and that's basically the tokenomics, right? But from investor perspective, I think there's basically the need to kind of understand deeply the underlying sector or basically industry that the DePIN project is targeting. because you have like wide space of projects, like doing energy business, doing like wing bits, dealing with flights data. Then you have like AI data. You have like wide range of businesses and industries that like the investors needs to deeply understand, which is a little bit different than if you invest into like only DeFi projects, because they're a little bit similar.
So I'll lightly reiterate what they said, which is, we want to understand the levers of the business. This is much more traditional businesses in certain regards, and how crypto can make that more efficient, more democratized, from a various, lens. But I want to add one thing too, which is you're dealing with physical hardware, right? And physical hardware is tricky for a variety of reasons. And so I think one thing that we look for is an obsession or an understanding with the space, because oftentimes there's a lot of nuance that can be lost for somebody who's looking in from the outside, even if you can underwrite the levers of the business. And then one other thing too that I think is hugely important for anybody in the pre-seed or the seed side is the team, which I think that applies DePIN or without. But for us, we recognize that founders will pivot and that we're in the trenches with them for what we hope is 10 plus years as they build long-lasting businesses. And especially in DePIN, where you need to deploy hardware, you need to actually source the capital. That's a longer process. And so we think that team dynamics and team understanding of the space becomes hugely important, especially in DePIN.
So one thing none of you guys said was token economics. And I'm curious why that isn't one of the things that you guys focus on.
I can quickly jump in on this. I think from our end, we, especially in the pre-seed and the seed stage, I think from us, we recognize that a lot of founders, especially if they tend to have industry expertise or knowledge in something that involves a DePIN space, probably don't have the best understanding of tokenomics yet. And it's something that candidly, we think the right partners should be able to help their teams figure out. If a team has already launched a token and their tokenomics are really bad, that's a whole different story, because now you're trying to do damage control and do a lot of other things. But when they have the idea, it's more about how can the network itself grow. And then I'm sure we'll talk about it. Like there's tokenomics ideas that we found to make a lot of sense, but then when implemented don't work as well, right? And so there is some adaptability to this. So for us, we think that tokenomics is something that the right partner should be able to help a team figure out if they need it.
So I agree with Winnie on that quite a bit. And this applies in general to any Web3 investments with token, is most of them at the pre-seed / seed stage, they haven't even given any thought to the token. And then DePIN makes it even more difficult because you need to understand the economics of the business in the real world before applying any tokenomics. So usually when we invest in people where we think like, yeah, they'll either partner with some external entities, firms, who'll help them with the tokenomics, or they will do their own research, and we as investors will also help them.
I would mostly echo this, because I think like the tokenomics can make or break the project, right? So it's if done wrongly, it's a really bad thing for the project, and it could kill it. I mean, actually, so it is very important to make it and to design the tokenomics correctly. I think like a lot of projects, they need to like focus on understanding their unique aspects of their business and how to design a tokenomics model that actually fits them. I actually, like how Spexy has done it. Like they are sharing some like real cash first to users to fly drones and map the pentagons on the in the real world, right? So they understand actually what the users are willing to get and how much they actually need to pay for the users to actually do some work. And I think that's a correct approach, because it helps to understand the product, the business model and the project deeply, and then they can design and implement and give basically the token rewards to the users and scale the network further.
Yeah, I mean, listen, I think the general takeaway I think you guys mentioned is A, team is most important, B, at the earlier the stage is, the less important that is, because you have to understand the economics of the business. B, you have to understand what models are working, what aren't working, and C, you can kind of find the partners to help kind of figure that out as they go. But the other implied point there is that, and this is something I've seen, is the projects that seem successful in DePIN as opposed to other areas are those that have a team that's focused on that vertical and knows the vertical best and is adding the crypto component to it, right? And so we've seen that in a couple different projects, whether, which we can talk about. Related to this, why have you turned down projects? What makes you say, no, I'm not investing in that project? Because presumably you each have said no to 20, 30, 40, 50x more projects than you've said yes to. So why are you saying no?
So primarily it boils down to the team. So one, if nobody on the team has the vertical experience, right? Like if someone is trying to build in the telecom space, but nobody has worked in the telecom space or has been a part of that space for at least a part of their career, we think like it would be a steep learning curve for them to actually build out in that space. So that's one. And then the second is if we think that they don't have a complete grasp of the opportunity, where they might be pitching it as like, hey, it's $1 billion opportunity, but we see it as a $100 billion opportunity. So if they don't fully grasp the scope, we think like it's a pass because that might not be the best team.
So they think too small.
They think too small, yeah.
Fair enough.
Yeah, Rakesh already mentioned that, right? It's sometimes we don't see the correct team doing and going after the opportunity, or the right team going after the opportunity. But I think sometimes what I come across is basically the market seems to be quite small for us, right? You need to have going after a big market that can actually support big revenues. So I think like these are probably the two big reasons why we mostly like turn down a project.
To not repeat what they said verbatim, but I do agree. I'll add one thing to this. I think that, and we've been sort of chatting about this, indirectly, but early stage, especially pre-seed and seed, there are unanswered questions, right? Like there are going to be. It's very rare that you run into somebody who has every part of the business totally figured out through and through. There are going to be unanswered questions with design, with verification problem, for example, if you're dealing with like compute jobs. And so one of the other reasons I think that people will pass too is you kind of start having conversations to see how founders think. And I think a lot of times you encounter individuals who have come across crypto tangentially or seen crypto as a coordination mechanism and then go, yeah, I can easily port that over. I can easily apply that, right? And then you start to ask them questions and you start to realize that they haven't actually thought through or fleshed it out nearly as enough. And I think that becomes a challenge. So it's not that all the questions have to be answered, but I think definitely when pitching any investor, like we're looking to see how you think, because we're thinking we're going to be working in the trenches with you for 10 years. And so oftentimes you encounter, I think, teams, especially once DePIN got its name and started really picking up end of last year, right? A lot more projects. You get a lot of people who I think haven't thought through how they want to build out their protocol or why they need crypto. Oftentimes they'll just say, here's a thing, and we're going to smack a token on it. And for us, that's not how we think about building long-term businesses.
Fair enough. I think one of the elements of crypto, which you sort of implied a little bit there also, is that you list tokens in crypto far before you would take a company public. So the universe of tokens they're trading is larger than the public company universe by orders of magnitude. It's still relatively small in DePIN, right? In terms of what you and we would consider true DePIN projects with trading tokens, dozens, I would say, certainly not the 1,000 that you hear about, but there still are dozens. There's still real coin, real market cap in some. And the unique thing of this panel is you've got at least two funds that invest in liquid token, right? Both Rockaway X and EV3 have liquid token investing. So how do you think about venture on the liquid token side? And how do you think about evaluating those projects? Do you start with traction? Is it, how do you kind of consider those, and even because that investment is a very different type of investment from an early stage business plan.
Yeah, maybe I can start here. So it is true we invest in liquid projects that have a liquid token out there that is already publicly traded. So there are like several factors that we would consider. Most of the projects that have a liquid token out there are usually, or what we are looking at as are projects that are more mature, right? That are not necessarily super early stage. And for those projects, you are mostly looking for the traction they have and the revenue that they're generating, and whether there are some risks. So like you're looking more, or we're looking more to understand the risks, what is that are specific to the particular project. So for example, whether the revenues that they are publishing are true and correct, whether they have been audited. Maybe, we see a lot of projects actually like manipulating these metrics. So we need to understand that these metrics are correct. One additional thing that is sometimes misunderstood is how liquid the tokens are. Whether you're looking at a project that has a high FDV, it's not necessarily bad, but if it has like low liquidity, that creates a red flag because it's thinly traded and the price could be manipulated quite heavily. So, for example, there needs to be deep liquidity for the tokens that we look into.
So liquidity considerations, absolutely. I agree with what he said. I think one thing to add there, and total shameless plug for Sal because he spends a ton of time on it, but we run DePIN Ninja. And one of the things that does is it means that we have to aggregate a lot of data from protocols and talk to the teams on how they're operating, what their metrics are. And in that process, I think it also becomes pretty evident what teams have real traction and are willing to share their node information or the data information, and which ones can be a little bit fudgy about it or wishy-washy about it, right? To use a very proper term. And so for us, I think, it's not just understanding how the business itself scales, the levers for some things like, Helium Network, for example, that might mean consolidating to one token because their token design, while really novel and clever, just created a lot of market confusion, right? It looks at how does the team pivot? Are people building, are other companies on top of the network offering cellular plans, for example, right? And so we want to understand the levers of the business, but also I think we look at the raw data, and through that process, I think you can filter out a good amount of noise at the very least.
On liquidity, though, because I think this is really important, especially in the sector where you've got a lot of small cap. There are DePIN projects that have been around and had a trading token for years and are small. And so if you're sort of in a rut potentially where your small liquidity doesn't attract investors, and so your liquidity stays thin, and you don't get the investors because your liquidity is thin, you're in this sort of cycle. So how do you, as a smaller project, how would you break out of that? Can you give examples of projects that have broken out of that sector, or how do you advise projects which I think a lot of DePIN projects are, frankly, like most trading tokens in DePIN are not super liquid. So how do you break out of that cycle?
Yeah, so I think it's mostly working together with market makers because they are experienced in actually providing the liquidity to the different projects, and that is actually their job, right? So get in touch, or we can put you in touch with good market makers that we work with, and they can for sure help.
Oh, I don't know if you were.
Maybe you have a view. I don't know. You're not forced to answer.
No, you'll hold me at gunpoint. No, I won't plead the fifth. It's tricky, right? Because to some degree, it is this chicken and egg, and I think we see the cycle happen both ways, where interest hits and then more people want to buy in. Now you have greater liquidity; it becomes more attractive. Larger institutional players come in. The flywheel goes both ways. I think for some of the tokens and some of the projects, working with market makers or people who provide liquidity could be valuable, especially if you're really struggling for liquidity and that prices out even smaller funds. But But I think it also it comes back down to these are long-term businesses, right? Like this isn't the really quick rise of DeFi that you might want to see. And so even if the token might be struggling, I think I was at a talk once and somebody said, tokens aren't great because the moment you launch one, every part of the business goes out the window and founders are just fixated on price, right? And I'm not saying that's every founder, of course, but I think one thing is doubling down on building out the actual infrastructure of the business itself, and even generating nominal cash flows from the business, I think does bring in a lot more institutional attention, or at least larger attention, because now you're able to underwrite these businesses a lot better, right? Granted, that means that you might have high multiples or other areas that add challenges, but I think that doubling down on building out the infra of the business and becoming profitable with customers at the very least, that's usually a pretty big catalyst for change, I think.
I get the other question there is, you could also look at the low float as an opportunity if there's a way to invest privately, and that will prevent other people from investing, because the corollary is that if float is higher, more investors are probably interested. The token's probably higher in price, right? So, and maybe that's okay, but is there also an opportunity in lower projects that you foresee traction to, that maybe there's a way to kind of do some other structure type of transaction? I know those are things you guys look at, or it's just private early stage boom, or liquid trading, buying on the market too.
Yeah. So before we invest, we always get in touch with the team to see whether there is some opportunity to invest privately, because ultimately we want the team to have enough runway, enough resources to deliver on their vision, right? So, of course, like investing on through the open market and supporting maybe the price is helpful for them, right? Maybe, right? Because they would rather have increase in price and But I would say the biggest concern for us is always like the runway and whether the project has enough resources to deliver on the vision, right?
I think for us, mostly in terms of the capital that we deploy, we focus on early stage illiquid and public tokens, usually DePIN public tokens. That being said, I do think that DePIN, especially as a space, creates really interesting like financing vehicles, whether it's like partial debt, partial restructuring, like very interesting financing vehicles. Daylight, for example, is a decentralized energy resource network, and they're utilizing that network to be able to create a debt tranche that can give you a relatively high yield, right? And so while we're not deploying capital there, I think that we're going to see a lot more of these hybrid structures that allow investors to take somewhat in between risk, right? Not just either buying the private deal or buying the public token, but allow you to sort of structure it in between debt and equity as well. I think we're starting to see those models popping up, but I still think it's pretty nascent. So we're still piecing through all of that.
Gotcha. Then related to that, you guys think a project should have one token or have a more complicated capital structure? I'm looking at Vinny on this. He's on the spot.
I love this question. Okay. Quick lesson on Helium very quickly. I will not whiteboard. I won't draw diagrams, I promise. Basically, they decided when they wanted to launch the mobile subnetwork that they were going to do a multi-token structure, right? They're going to have an IoT token, a mobile token, a main Helium token. And the way that they'd interact is quite complicated, but very clever. It silos risk, so you can add new subnetworks as you want to. It creates one-way redemption, so there's like a built-in hedging market. The challenge is it's just too confusing. Like, it makes theoretical sense, but there aren't enough sophisticated players that are operating in the space. And a lot of what people are buying, speaking of liquidity, when people would see something posted on Twitter that they'd misinterpret, all of a sudden there was massive mispricing between the subsidiary token and the main token. Although in theory, if you actually look at the capital flows, you look at the diagrams, you look at how the business makes money, right? Because they have people selling cellular plans, the design makes total sense. And to me, this was kind of an eye-opening moment, which is theory's great until you actually go and implement it and it breaks. And so I think there is a place for this multi-step token structure. I fear that I think in the helium example, it might have just been too early. Not enough people knew about it. There wasn't enough activity there to be able to arb the differences that pop up. And so I think early on the learning is I would stick with a single token.
Keep it simple, stupid.
I would keep it simple, stupid at the beginning at the very least, but it's also a case-by-case basis, right? Like depending on what you're doing, maybe a complicated structure makes sense, but for people like me, simple, stupid's the best way to go.
I completely agree with this because people are not, they would have to spend a lot of time understanding the complex structure. And in this world where attention is everything, people don't have much time to do that. So the simpler it is, but it has to be functional. So probably that's why the buy and burn model has so much popularity. It is actually working. And it's been adopted quite a lot. Is preferable, right, than just like super complex structures that investors don't have much time and willingness to understand.
Yeah, what I've also seen is a lot of times even founders are not able to explain those structures. So I've been pitched by multiple projects where they want to introduce multi-token model, but then you start whiteboarding with them and they get confused themselves. So that's why I like keep it simple. And then maybe once the project matures, if there's an opportunity, introduce the second token if it makes sense. I think that would be a much better model.
Yeah, I agree. It was a loaded question just because with the amount of tokens out there and the limited attention, you don't have much of a shot. And if you confuse someone, it's just only unhelpful. I would also add, you probably want the model to fit on a page. And if it can't fit on a page, then it's complicated. And is that really adding value? I'm not so sure. Relate a different question. Industries. What sub-sector or have you looked at? I mean, you've mentioned a couple in energy, Vinny. David, you mentioned a variety. Where do you think DePIN is well suited, or where do you find DePIN in particularly interesting?
So for me, it's energy, compute, telecom, like all these sectors, like they've already been disrupted. Like you have multiple players trying to build in that space. So I think those sectors have a lot of opportunities still. Beyond that, I think there are many other opportunities in the drone space, in the weather monitoring space, which I haven't seen being explored a lot. So that's where I would want to see, like, some more innovation.
Yeah, like what I recently am looking into is DePINs that are particularly targeting emerging markets, because I think that's something where DePINs uniquely fit. For example, we you guys probably know like Dawn Energy, right? They're doing and sharing internet within US, where there's still many people that are not that don't have like a good quality broadband internet. But now imagine emerging markets like Africa, South America, where there are even less infrastructure available for those people. And if you can bring and incentivize local people to start and share their infrastructure with the local communities, it actually brings them a lot of value. And I'm sure there will be big players in the space that actually target emerging markets in a unique way.
I actually
just 1 second. So, David, on that point, though, you're effectively talking, I think, a little bit about a leapfrog concept, right? Where you, instead of, digging new fiber pipes to connect XYZ city, people can put up, repeaters or hotspots or line of sight, whatever, that they can then can monetize. So you effectively crowdfund a cheaper infrastructure that you don't rely on centralized companies to do. Is that kind of the concept?
Exactly that, right? Yeah, and ultimately, companies can bring internet to the local people. at fraction of what the local internet service providers are offering, exactly because they are owning and incentivizing the deployment of the underlying infrastructure. So a lot of the revenue actually stays within the country, which is valuable, especially for the government, right, and for a local community.
And the risks, just to handle this for 1 second, though, would be regulation and corruption, which are kind of the barriers to deploying that at scale, I would think, right?
I actually was speaking of the Dawn example.
Nope, it's gonna be another plug. Get ready.
No, I promise not plug. But I wanted to highlight that because what you just said, Tom, right, is like really powerful when you think about it, which is you don't need to lay miles and miles of fiber. Like that is a expensive, time-consuming proposition. And so I think the interesting thing about the Dawn side and stuff that excites me personally, and I think us, is when there's also a technological leap. You're talking about leapfrogging. The real leapfrog here, I think, is the ability to beam internet many kilometers from one rooftop to the other using high-frequency radio waves, right? Like that is the technological leap, and then it enables this massive build-out, especially in still developing nations, which I think is cool. Other areas to not, jump on what they're saying. I think compute is very interesting. I know, that's where we're sort of here, but I do. I think the decentralized compute paradigm is going to be transformational, but I also think that it's significantly oversaturated right now. And so I think there's certain cases in which it makes a ton of sense and works well. We're still sort of piecing through that market because it's massive, as I'm sure you know. I think another area too touched on is robotics. I think that whether it's not just about deploying the robots, but I think DePIN is really, really cool for mapping the world, right? And that doesn't just have to be, a device that's mounted on the car, like a Hive mapper, right, that you're able to drive around and map the roads. But I think that if you have a robot that you want to deploy, it needs to know where it is, what actions it can take, and what the space is that it's in. And so decentralizing mapping by, utilizing the smartphones that people have in their pockets, I think that's very compelling. And I think we're going to see a lot more robotics-related DePINs popping up soon.
Pretty cool. Well, what you missed the opportunity to give a plug to the DePIN Kenya event coming up that you guys are involved with, right?
Yeah,
David gave it to you on a platter, and you didn't mention it.
He did. Okay, so Sal will kill me for that. Thank you for saving me on that one. We're hosting DePIN Summit in Kenya and Zanzibar this year. So if you are interested, please come. You'll be able to see firsthand what he's talking about this technology being applied on the ground in developing nations, leapfrogging current architecture. And we think we've got a great group of speakers, CEOs, founders who are willing to fly to Zanzibar to come and hang out and chat. So
I can't wait to hear all about it.
I hope you should come.
You got other things I can't. I would love to go, but not making it, unfortunately. I hope David's going to go.
David's coming.
Excellent. Well, talk to me also and tell people, we're hearing your perspective on DePIN and what you guys look for, what you don't look for, how that works. But give us another layer up for your investors. What do you explain? What do you hear? What do you have to explain to your investors to get them to invest with you? How well do they understand the space? What makes them invest in the fund? Is it the same? Do you have to high level it? You must have to high level. It's just a question of degree. So is there any insights? Has that changed over the past year? Like how did I'm just kind of curious to give people here some insight about, because everyone here is so close to it. You guys are above it, and then they're even up here. So what does that universe look like? How do they think about this space?
So I think DePIN is easier to explain to our investors because a lot of the DePIN projects, they're solving real world problems, right? So if you explain to them the infrastructure in emerging markets where they skip several generations and directly move on to like this DePIN concept, it's way more easier to explain than explaining just a new blockchain concept.
A new L1 or whatever.
New L1, right? No revenues. So it's very difficult for them to understand. Whereas DePIN has been like relatively straightforward for us to explain to them.
Yeah, I would completely agree with this. So DePINs have the unique advantage of basically creating better product at a cheaper price, and that is something that investors understand very well compared to some infrastructure product on layer one, layer twos that might need a little bit more elaboration why that's actually needed. So I think DePINs have the advantage in this.
I did agree. I think they make DePIN projects make sense to investors much more than, especially the ones not familiar with crypto, much more than sort of the siloed DeFi ideas. So I think it's definitely a bridge between sort of us deep in the Web3 space and people who have yet to see it. I think DePIN makes a ton of sense in that avenue as well. So in that regard, I think it's been easier than expected to sort of explain and chat about it. I think one of the tough things, though, is reframing what a blockchain is to people who have just kind of heard it on the periphery. Everybody has this idea, and usually they're somewhat wrong. And so I'd like to try to bring it back and say blockchains are coordination layers. And what we're doing is we're enabling trustless coordination across many individuals. And I think when you bring it down to what fundamentally blockchains do, then I think people are able to understand a lot more how it fits in. Otherwise, they're like Bitcoin, but physical, you know?
Right. Yeah, that's a hard one. Well, then what do we in this sector have to look forward to in terms of, the investment side and scale? Think about it like how many tokens you expect to see issued. You see a whole bunch of new DePIN projects coming. You see revenue growth that's material, like 2025, 2026. Kind of what are you excited about? Not sector, not subsector wise, but just sort of like traction wise in this space. Is it more tokens, higher market cap, more revenue? When? Give us some things as to what you're sort of looking forward, some benchmarks, some milestones for this sector that each of you guys think about a little bit.
I can give a really quick answer, which is I think one of the biggest things we hope for this year and next year is demand. DePIN projects, we've seen supply scale really well with token incentives, but to bring up the example, sort of in the compute space, right? You can have a lot of providers, but devs especially are used to a very specific experience, very specific ease. And I think now a lot of these teams have put in the groundwork to abstract away a lot of the crypto, to handle all of the payments so you can easily plug in a credit card, right? And so now I think we're uniquely in a place to start seeing a real pickup in demand. And I think over the course of the next 18 months, that's going to be a big driver for not just DePIN attention, but DePIN adoption.
So hold on, what's the total revenue DePIN engine now, roughly? Like 10 million, 15 million?
Higher than that. I don't have a number.
But roughly 20? Whatever, who cares?
Total?
Yeah.
It's 50, how probably?
Where's that in a year or two? Does it double? Does it, like, what scale is that going to go up, do you think? Because you're talking about traction, right?
This is not investment advice, and it's my own opinion. Let me start there.
Obviously.
I think we could see an order of magnitude, if not more. I think we're seeing 10x in revenue, maybe 8x, but I think we can see an order of magnitude over the course of the next 2 to 3 years.
Okay, great. That will be. I look forward to that. I hope Fluence is a piece of that as well, helping do that as well.
Absolutely. We hopefully a big driving part of it too.
Definitely. David?
Yeah, I look forward to what you guys said already, and that's the revenue that is increasing, and I hope that number will accelerate significantly as the UX gets smoothened out, like crypto and blockchain moves more towards the back end and gets abstracted away, and the products and basically services that are utilizing the DePIN infrastructure would match and exceed the quality of like traditional businesses and offerings. And when that happens, I think the entire DePIN space will explode significantly. So I'm extremely looking forward to that.
Yeah, for me, it's like definitely I agree that there is going to be a lot of growth in the next couple of years because a lot of projects have laid the groundwork. One of the things that I'm excited and hopeful for is the data coming out of these networks. Because if you think about the traditional businesses, like for example, telecom network, like all the data about, like, not about the user's personal data, but about the communication patterns and how the network is used is very proprietary. But the data coming out of these DePIN networks will hopefully be open and public and open source, because that helps us make these networks even better.
We are at a time. So you guys, any last comments, words, questions I didn't ask you think I should have? Predictions, fears, threats, wishes, anything you got, anyone want to add before we close it down? Not forced to, but I know Vinny's got something to say.
Yeah, always.
Always.
Come to DePIN Ninja or else. No, I'm just kidding. Yeah, I think like the one thing to add is crypto started sort of as like a separate financial system, and we knew this, right? And we built all this DeFi and we kept it together. I think DePIN is the bridge to external value, right? Like you actually get cash flows from people buying a service in a business, right? Like I think that is a bridge that we in this room start to see, hopefully see, and are very, very hell-bent on making a reality. But I'm excited to have other people see that as well.
You didn't see my intro slides, which literally had a picture of a bridge. Literally a picture of a bridge.
Great.
And David did see that, though. Anything else from Rakesh or David? Nope. Oh, great. Well, listen, let's give these panelists a round of applause. Thank you all. Appreciate it.